Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the things you need to know to kickstart this trading day Monday. Stricter mobility restrictions take effect in Metro Manila as the capital reverts to Alert Level 3.
Philippine stocks are seen to be volatile this year. That's due to concerns over the pandemic and the upcoming presidential elections.
Philippine Airlines rings in the new year on a high note. The flag carrier exits bankruptcy process in the U.S. in less than 4 months after its filing last September.
And damage in agriculture wrought by Typhoon Odette soars further. That's to 9 billion pesos, but the government remains hopeful that palay production will exceed 2020's harvests.
Metro Manila is placed under the stricter Alert Level 3 until January 15th. That's on the back of the surge in COVID-19 infections in the region. Camille Samonte with the full story.
The Metro Manila Council attributes the uptick in COVID-19 cases to the recent holiday gatherings. Based on the 2-week growth rate from November 3 to December 17, NCR was only at negative 52%. But from December 4 to 31, the COVID-19 growth rate increased to 285%. The MMC now eyes an enhanced vaccination mandate to allow the mobility of those vaccinated under Alert Level 3.
Di ba meron kang card dito, bibigyan ka ng card. How we could make use of those in terms of mobility. So as that we protect those unvaccinated from the vaccinated.
Abalos also noted that this proposal will allow the economy to remain open amid the threat of Omicron variant. Apart from this, the council also considers imposing additional requirements for intra- and interzonal travel.
We should learn how to live with the virus right now. But the most important thing is for everyone, talagang lahat po ay mag-ingat to exercise health protocols.
Although 10 LGUs in NCR are already classified as high risk, Abalos said there is no enough data pointing to Omicron variant. He, however, assured the public that LGUs are ready.
You do not have to wait for it. Paghandaan na natin, gumawa tayo ng aksyon.
Now that the holiday season is over, commuters flock to Parañaque Integrated Terminal Exchange from their vacations. Some complain that physical distancing on buses is not being observed.
Sobrang crowded ng bus, pati mga bata nakatayo.
Baka insulit pa kami sa bahay, baka may naano kami sa alam.
The Transportation Department says the 70% passenger capacity on trains will be retained under Alert Level 3. This is to avoid crowding of passengers at stations, which may increase the risk for virus transmission. Any changes in the capacity of other modes of public transportation will be subject to the guidance of the IATF. For News 5, Camille Samonte, We Are One News.
4,600. That's the number of new COVID-19 cases recorded yesterday. Total infections have now reached nearly 2.9 million, with some 21,400 of which are still active cases. Around 25 new deaths were also reported on Sunday, pushing the death toll to 51,570. Total recoveries climbed to 2,779,000, with 535 new survivors logged yesterday. And it's the start of a new trading year at that, Dan. Glad to see us back together again here on broadcast. Now, hoping the markets are as agile and as optimistic as we are. But some economic figures to at least kickstart the trading day. Give us a lowdown on that.
Okay, Jess. Well, I'm not sure about the optimism of the markets. I was just checking in on that. But before we get to that, happy first trading day of 2022. And you're right, this just in, some PMI figures for December to kick off the market movement. And indeed, as you mentioned, some positivity there. You can see that on my Bloomberg terminal. Now, the December PMI 51.8 versus 51.7 in the month of November. So that is a rise, especially when you compare that to a year ago, 49.2. This is the highest reading we've seen since March of 2021. This is also the fourth consecutive month we've seen of expansion, and it's also the highest reading since, as I mentioned, almost a year ago now, March 2021. Now, as I mentioned earlier, how is the New Year's sentiment when it comes to equity markets? Not very nice. You can see on my terminal here, quite a slump, down by 0.7% to 7,071.66 rather. This after we did have a grueling 2021 and we ended the year on the back foot. We were down 2.9% on the last trading day. You were the one reporting that on December 31, but we were still higher than compared to this January 3 morning. Of course, a lot of tighter mobility restrictions, a return to alert level 3. But, if you compare this to the worst case, which was on March 19, 2020, we went down to 4,000 levels, Jess, and we actually gained by close to 80% compared to that time here. Now, another thing that I wanted to look into is the movers here on the market open. Which ones are actually staying the course here? Around 7 stocks are in the green today. You can see Ayala Corp leading the charge together with Meralco, URC, GT Cap, and SM Investments. So a very mixed picture here, but a lot of conglomerates leading that charge, whereas you've got a couple of very big property players as the losers here, down 4.7% for Robinson's Land, and for Ayala Land down 4.5%. Now, here with us just to discuss more about that sentiment today, we do have Mike Enriquez. He's the president and CIO of Sun Life Management and Trust Corporation. Hello, Mike, and welcome to 2022.
Yeah, hello, Danny. Happy New Year.
Happy New Year. Okay, I'm not too sure if it's a Happy New Year when we look at the markets open. We're approaching the 7,000 levels. But do tell us, what is driving this sentiment here? We've already had, at least towards the last days of 2021, we hope that the markets had digested all of these increasing cases and these alert level 3 announcements already. So what's going on here? Why the sudden downside risks as we open the year?
Yeah, so it was quite unfortunate that we closed 2021 on a low note. We were hoping that we would close it on a higher note. Our index target was about 7,200. We were expecting, in fact, that it would be breached. But unfortunately, because of this COVID case surge from just 1 week, 10 times increase, so it really spooked investors. And this is really just a normal reaction to higher COVID cases. And we've seen this trend in the past. Higher COVID cases, market reacts, and then as COVID cases continue to stabilize and go lower again, then the market will start to climb up again. But definitely there's a lot of changes and improvements over the last 2 years in terms of how the government and the public has accepted COVID-19. And clearly, even with this new variant of concern of the Omicron variant, I think hospitals are more equipped now. There are more vaccinations happening, even booster shots. So I think this is just knee-jerk reaction to this slight uptick in COVID cases, but I'm sure this would be welcomed with a lot of optimisms for those bargain hunters.
Okay, good point there. So now might actually be the time to swoop in. To what extent do you see this momentum going downwards? Are you seeing a clear support level, at least at 7,000?
Well, I think 7,000 is a very strong support, both on the psychological level and as well as on the fundamental level. If it breaches that, then probably we can expect the index to slide further down to around 6-8 level. But I think, again, investors should look at the market on a long-term basis. I think the fourth quarter was really a testament that there's more economic activity. You'd seen the research has been saying that it was more a result of holiday festivities and spending, and you'd see that the activity in the mall has really dramatically increased. That's why you should expect consumer spending in the fourth quarter should be strong. The other concern probably would be the recent Typhoon Odette devastation in the Visayas might derail a bit on the agricultural sector, but we're expecting the rebuilding efforts definitely can add more to GDP growth. And then the last one would be the elections, but that won't come until second quarter of this year. So there's a lot of good news expecting domestically. However, offshore, there's still that concern on the Fed, interest rates, China on their unstable property and healthcare sector, which may spook investors again. We don't know the extent of the damage there. But nevertheless, for the Philippines, I think we're on track on recovery in spite of this surge in COVID cases.
Sir, just a quick look back on the cyclicals in 2021. Did they in any shape or form recover? And how far are we still from pre-pandemic levels? I'm talking about, the airline industry, the tourism industry, the ones that have just been continuously battered, even the property space and the financials to a certain extent.
Well, I think there is slight improvements in their recovery, but we haven't really seen the full recovery story for this, especially the tourism. I think there's some trickles of domestic tourism happening, but foreign tourism is still closed. On the property front, depending on the sector, where the high-end sector continues to be quite resilient, the middle to low-income sector faced some problems. But nevertheless, office continues to be quite strong. I think BPO have continuously poured in more investments and demand for office spaces. So banking sector, we've seen in the news that there has been an uptick on loans, but housing loans have not yet really picked up, but overall bank loans have started to pick up. So I think there's more to the improvement for 2022 from in terms of the valuation. I think a lot of people continue to be undervalued. There's a lot of opportunities for investors to pick up value stocks in the market.
Okay, sir, let's talk about the mining space, which was, really going against the tide in the latter part of 2021. Of course, a lot rallying on some deals happening apart from the lifting of the ban on open pit mining. But then there's concerns that with the election, there's going to be uncertainty when it comes to policy again. Can you say that, this movement in the mining is again just, sentiment driven, excitement with those announcements, or is this a real fundamental shift of a sector that has been ignored or, has had some trouble for quite some time that is now on the path to recovery?
Well, I think that has yet to be seen on how the government will really implement the reopening of this sector. And we all recognize that there's a lot of opportunities, and the country is, in fact, rich in natural resources. But on the other hand, we have to consider the effects on the environment. So there's a lot of things that the government would have to weigh on, but it depends on the direction of the new administration, and we have yet to see that. But at least right now, there's recognition by the current administration that they have to do something about the mining sector.
Okay, are foreign investors keen on this sector? Because you mentioned, a lot of the environmental issues are still to be addressed. And this is a sector that a lot of people, when they talk about sustainable investing, they don't want to touch. So how are they going to be, benefiting, if at all, from foreign direct investments?
Well, definitely that's a good point, because previously, when during the height of the mining boom in the Philippines, a lot of the foreign investors, in fact, are the ones very keen on investing in the Philippines because they recognize that there's a lot of natural resources to be mined here. But right now, there's that change in mindset on impact investing, sustainable investing. So I think they have to be careful in how they would be able to partake of this opportunity, but at the same time have some balancing efforts So, but I think some of the offshore mining companies will continue to be keen on taking advantage and expanding their footprint in the Philippines.
Okay, so very tricky. And finally, sir, before we let you go, do you have a year-end forecast for 2022 on this first trading day? We're gonna get back to that when we end the year and see whether we made that.
During the latter part of last year, we were quite optimistic already, and we're targeting 7,900 for this year,
Okay.
and that is just about slightly above, I think 16, 17 times price to earnings, based on a 20% EPS growth. So we're still a bit conservative, but optimistic at the same time.
Okay, so hoping for that optimism to follow through and maybe some upside risk to those forecasts as well. But of course, 7,978 would be very good for us right now. So thank you so much, Mike Enriquez, President CIO of Sun Life Financial.
Now, here are other stories from the corporate front. Philippine Airlines has announced the completion of its financial restructuring ahead of the new year. In a statement, the flag carrier said it has exited Chapter 11 proceedings in the United States, noting that it has reorganized its fleet and is now better capitalized for future growth. Meanwhile, its parent company, PAL Holdings, filed an application with the SEC for a capital increase to 30 billion pesos. The proposed amendment is more than double PAL Holdings' current capital stock at 13.5 billion pesos. Preliminary data from the Bangko Sentral shows bank lending grew for a fourth straight month in November. Outstanding loans issued by big banks 2 months ago increased by 4% year-on-year to 9.3 trillion pesos. This was the fastest rate since the 4.7% in August 2020. The BSP attributes the faster lending growth to businesses' optimism on the country's economic recovery. Despite the growth in lending, leaders of the country's largest banks say they are cautiously optimistic about 2022 as the Philippines slowly emerges from the pandemic-induced recession. BDO Unibank President and CEO Nestor Tan tells the Philippine Star that he's expecting the favorable outlook to continue into this year as economic activity climbs. This on the back of increased mobility and ramped-up vaccinations. But despite the optimism, Metrobank President Fabian D. says they are still hoping for improvements in the country's COVID-19 situation as cases rise over the holidays and with the emergence of the Omicron variant. When Businessworld Live returns, inflation likely slowed in the last month of 2021 on the back of lower fuel prices.
And Typhoon Odette's damage to agriculture climbs further to 9 billion pesos. More of that after a short break. Stay tuned.
You're still watching Business World Live here on One News. A Business World poll shows headline inflation probably slowed in December as fuel retailers reduce prices. Although holiday demand and the impact of Typhoon Odette may have caused a faster rise in food prices. The poll yielded a median estimate of 3.9% for the December inflation. This matches the midpoint of 3.5% to 4.3% forecast given by the Bangko Sentral last week. If realized, inflation will be within the 2 to 4% target of the Bangko Sentral. However, the median estimate is lower than the 4.2% in November, while still quicker compared with the 3.5% in December 2020.
Here are the other headlines we're keeping our eyes on. Some Philippine financial transactions have been subjected to tighter scrutiny. That's even if no countermeasures have been required yet. That's after the Financial Action Task Force put the country under its gray list. This prompted the government to call on financial institutions to apply only commensurate measures, as the Philippines is not a high risk to financial crimes. Instead, the country is only classified as jurisdiction under increased monitoring by the Paris-based watchdog. And this from the Philippine Star: loans extended by banks to MSMEs slipped by 5.2% in the first 9 months of 2021. The Bangko Sentral says lending to the MSME sector amounted to about 440 billion pesos. That's from January to September of last year. That is 24 billion pesos lower compared to the previous year's 464 billion pesos. The BSP adds that the banking system's overall compliance ratio remained below the 10% ratio. And the Agriculture Department remains hopeful that the country's palay production will still exceed 2020's harvest. That's despite the damage caused by Typhoon Odette to agriculture, reaching 9 billion pesos as of December 31. The DA estimates show that 2021 palay output will reach at least 19.95 million metric tons. However, this is still lower than the department's target of 20.4 million metric tons.
Circling back to inflation, the last print of the year comes out Wednesday, with majority of economists expecting some easing. But our guest this morning is just expecting some slight cooling at 4.1%. Let's find out why. We have on the program RCBC's chief economist, Mike Ricafort. Good morning, Mike. Thank you for joining us.
Good morning, Jess, and to your viewers. Happy New Year.
Okay, first things first, why just a slight easing here, cooling for the November print, at least based on your assumptions? Aren't we expecting much risk here from Typhoon Odette?
Well, Jess, it's primarily due to the base effects. It's already normalizing in the sense that we came from a very low base last year. That's why we had this higher year-on-year inflation that could average close to 4.5%. And now we're, since November to December of last year, we're already starting to a much higher base. That's what part of the reasons why there's some slowdown on the year-on-year inflation, which is kind of counterintuitive because, because of the fact that energy prices remain high, and we have seen, there's a chance also that we may have seen some pickup in prices, especially in hard-hit areas of Typhoon Odette, especially in the Visayas in now. That would mean some pickup in the prices of food and other agricultural products, which account for a large part of the inflation basket, close to 40% for food. Mm-hmm. So at the same time, we have seen some temporary, whenever we had, in the past, whenever we had strong storms similar to Odette, there's a temporary spike in inflation. Mm-hmm. The fact that, it just happened that the base effects are already normalizing. That's why there's still a chance that it could still be at the 4% levels, but nonetheless, it has already eased from the upper end of the 4% levels that we have seen earlier.
Okay, but given that as well, should we be expecting any action here from the central bank, especially with expectation very high that inflation is going to exceed the target?
Well, because the rest of the world is also experiencing the same, even the US, other countries, because, the hard lockdowns a year ago in in especially in April to May of 2020 resulted in record low global oil prices. We've seen record lows back then, but now it has gone up as alongside with other energy and commodity global commodities. So we have seen already some elevated year-on-year price increases or inflation, but however, that's already that's already behind us. The base food is already starting to normalize, and hopefully, because these are all supply side related factors, so that may not necessarily not necessarily due to higher demand. So the cost for the spike in prices or inflation. So hopefully, this would still support the continuation of accommodative monetary policy, at least locally. Maybe until such a time that we see an upward adjustment or Fed rate hikes, that would only be a time that there's a chance for further normalization of monetary policy, because many central banks around the world tend to follow the Fed whenever they hike rates. But that may still come after the Fed is done with its accelerated tapering of fund purchases. So hopefully that could come maybe, well, they have already accelerated it to early 2022. And once they're done, that's the only time that the Fed could start hiking rates. And when the Fed starts, as part of the normalization, enabled to better curb inflation or better control inflation into more manageable levels. So at the same time, also inflation expectations to better manage them. So that would only be the time that there would be some adjustments in other countries, and that may include also our country for that matter.
Well, another major global concern here, Sir Mike, of course, the emergence of the Omicron variant. We already have local cases. So far, you have more than 10 being logged here in the Philippines. How much of a threat is this to the country's recovery?
Well, it could slow down the recovery, Jess, because if we put things into perspective, the cases have already gone down significantly to just a range of as low as 100 to 300 per day just a few days ago, before the surge during the holidays. And then here comes the increase. It's suddenly up to 4,600 at the latest, and that's the highest in more than 2 months since October 24. And definitely, when that resulted in the upward adjustment in the alert level system for Metro Manila or for NCR to alert level 3. So that could slow down the recovery a bit, because that effectively reduces the capacity of some indoor industries as well as some outdoor industries that were covered. So this is not really new to us. We only came from this level sometime around October also. It could slow down definitely the economic growth, as well as the Omicron variant, which is emerging in other countries as well. We have seen some spike. And it's not just Omicron. It's a combination with the Delta variant. So that's gonna, that would result to restrictions in terms of travel, flights, and global mobility. And so that's going to weigh on economic recovery prospects as well. That's going to slow things down, because had it not been for Omicron, economies could have already reopened further. In fact, there were even market expectations that locally, by early this year, it could have been eased to alert level 1 already, had it not been for this new variant that came out, which is more transmissible, but nonetheless less deadly. But of course, it's a matter of prudence to really prevent this from spreading further and to
In
nip
fact,
it at the bud.
the last time we talked, Sir Mike, you did mention that you are expecting pre-pandemic growth at least by the latter half of the year, last quarter, if I'm not latter part of next year or the fourth quarter of 2022. Does that still hold true given the looming threat of the Omicron variant?
Yes, it still holds true that the economy could go back, at least in terms of GDP, or the actual output by the latter part of this year, by this 2022, this new year, and maybe if well, especially if the Omicron variant is better controlled and managed eventually, especially the fact that we have vaccines right now. Well, we have massive vaccination. We're already moving closer towards population protection as a country, and maybe give it maybe another month or two. There's a chance that that the country would move closer towards herd immunity, and many countries are also moving towards herd immunity as well. So that's the only thing that a source of hope. At least it could help prevent Omicron from spreading further. And of course, definitely the need for tweaks by the vaccine makers and COVID medicine or pill makers enable to better adapt to this Omicron variant. So yeah, it would still that view, the view of returning to pre-pandemic levels for the economy is it possible? We have the election-related spending this year. At least, hopefully, well, hopefully in the coming months when we reach the important vaccination milestones, that's going to help also curb new COVID cases, and hopefully. Well, because in view of the recent holidays, this surge is somewhat, well, that's partly as a result of that. And hopefully, with greater observance of minimum health protocols, such as social distancing, better ventilation, as well as, of course, the increase in
Observance
inoculation,
of health
accelerated
protocols.
vaccination, especially. Especially even the booster doses. So hopefully that's gonna help control
Well,
this Omicron better, especially on a global perspective.
Here's to
And,
hoping indeed that we get to roll out those vaccines fast enough to at least temper the effects of the Omicron variant. Thank you very much for your time this morning. Again, RCBC Chief Economist Mike Ricafort. Thank you, sir, Mike, and Happy New Year.
Yeah, thank you so much, Jess, and to your viewers. Happy New Year.
And that's a first look into the business day this Monday, January 3, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.